So if we look at my chart here, we have a chart where this is the chart of Bitcoin, and it's probably the most famous call that I ever made when we were at near 69,000. I said, guys, don't trust this. Everyone else was extremely bullish on Bitcoin, saying it was going to be 100,000 by the end of November, and then 200, 500,000 after. I looked at the chart and I saw multiple signals telling me that it was going to be a reversal and most likely a cycle top. So the first thing is to take a look here. If we draw a trend line from that first high, which was around 65,000, and we bring it right across, notice how price on Bitcoin did get above a couple times. Okay, now most people would say, oh, that's a breakout, right? And that's the common theme that we saw, is people saying, oh, it broke above the previous high, now it can go to 100,000. There's something in the methodology I discovered, and again, this is something I actually created. It's called the confirmation signal. The confirmation signal tells you that when something gets above a previous high, meaning people think it's a breakout, you need to see 2 consecutive higher closes for it to actually be considered a breakout. The reason is because algorithms and institutions will play games. They'll push something above a previous high, ultimately to reverse it, knowing that a lot of people will get stopped out on their shorts when it goes above that high, and then also people will go long when it breaks that high. So it's a way of getting most people on the wrong side of the trade, and institutions do this nonstop with stocks, cryptocurrencies, and etc.
Hey guys, welcome back to Library of Wealth. Today we have veteran trader Gareth Soloway sharing his insights for the recent move in Bitcoin, as well as his trading strategy for the crypto market in 2023. Soloway stresses the importance of managing expectations in trading. Even when a trade moves in his favor, Gareth advises against becoming overly greedy and chasing unrealistic gains. Instead, he suggests tempering expectations and being content with smaller profits when they align with the signals provided by the chart. He believes that a small loss or a modest gain can still be considered a significant success if it adheres to the trader's discipline and risk management rules. Let's get right into the latest interview with Gareth Soloway, as he gives insight into his crypto strategy and what we can expect in 2023. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Start to temper your expectations. When you're out of the money, a bounce may only get you back to break even. But I always tell my traders this, is sometimes a small loss or a flat or even a small gain is actually a major success. Number one, you didn't end up losing much money, and you ultimately used your discipline in the right way. So there are losses, there are small gains, there are flats. That's part of trading. The key to a good trader is to know when to exit and just follow those charts. Let them guide you. Don't force your input on a chart. Let it tell you when to enter, and the same thing, let it tell you when to exit. So the bottom line is, when it comes to trading, you have to first realize that you're not trading stocks, companies, cryptocurrencies, you're trading human emotion, right? So it doesn't matter what chart it is, the technicals will work for it. It could be oil, it could be gold, it could be silver, it could be Bitcoin, or it could be Apple stock. The bottom line is, people buy because they are greedy, they think price is going up, and they sell because they're fearful, they think price has gotten too high, and they want to get out of the position. So all charts are equal, meaning that if you have 1 million people trading any chart of anything, the reactions, the discipline, everything that goes into that is going to be the same. Once you realize that, you start saying, okay, well, I can trade anything out there. And that's why the methodology that I use is amazing, because it's applicable to anything out there. Crypto, gold, silver, commodities along the way, stocks, and everything else. And now my methodology, the bottom line is, it comes to key points within the charts. Bottoming tails and topping tails, you're drawing trend lines. Essentially, you're looking to generally go counter trend. Most people will tell you that that's the scary thing to do, and they'd be right. If you don't know what you're doing, counter trend trading, meaning if stock is falling dramatically, it's very dangerous to pick it up. Once you learn how to read the charts essentially guide you to the levels where the high probability points are, where a reversal will take place. So I'm looking at these different things that have happened for hundreds of years in the charts, in fact, thousands. You go back to the tulip mania in the 1500s, you go back to ancient Egypt, and you chart anything, you're going to see things that basically do replications. And all I'm doing is recognizing those, finding the levels where those will turn around, and I'm playing those accordingly, letting probabilities take their course. All right, so what we see here is you got a close above and then you reversed back down. You got over here a close above and you ultimately never got a secondary close higher. These were all games by big money, keeping it and kind of getting people to be on the wrong side before reversing. Now that's just part of it. Number two, you had an RSI negative divergence out there that was massive going on here from this high to this high. You had a higher high, but the RSI was actually declining. You had mass euphoria of double top kind of nature, that if you study psychology and you study human nature, it was telling you that this was the end of a run, not the beginning of a bigger breakout. When you learn how to read the charts, you start translating the charts into the English language or whatever language you are accustomed to. And they do start speaking to you. And you can start to garner information that most people will have no clue about. It is unbelievably powerful. So this was a great call. And again, it was something that the charts were alerting me to. So the biggest thing for me, and I keep it very simple, if you look at my charts, I have a few trend lines on it. Occasionally I'll use Fibonacci retrace. I think Fibonacci, one of the things I love about Fibonacci is that it occurs naturally in nature, right? So the Fibonacci sequence in the petals on a flower, it's in a Fibonacci sequence. The rings on a tree, when you cut down a tree, Fibonacci sequence. So what I'm a believer in is that we are part, as people, as humans, we are part of something bigger on this planet, and we are affected by things like nature is. And so therefore, things that replicate in nature will most likely have an impact on us, and therefore whether or not we're a buyer or seller. People say, oh, the lunar cycles have no impact. This is just astrology and like all this nonsense. But think about it like this. We as humans are 80% water. Okay, the moon affects the tides. All the tides on the earth go in and out based on the moon. If we are 80% water, it makes sense that there's a little bit of an impact. Now, is it so much where I notice that I'm feeling different when the tides are going out or in? No. But if you map that across 1 million, 100 million investors, the slightest change in sentiment can actually be something bigger when it's mapped out amongst 100 million investors out there. I think that, again, the charts are the charts. In fact, I've been able to use them to make a lot of great calls in crypto. So I do believe it still works perfectly for cryptocurrencies. But I do think that we are in a world that's ever increasing in speed, right? So I still remember back, in the 90s, you still had to call your broker to place a trade. It took time. They had to put it in. Heck, before that, they had to do a ticket and then run it over, or you had the ticker tape, right? The tape going by, that's where we get the tape on stocks from the ticker tapes, right? So again, as we advance, we get faster and faster. We're now in a world where speed is so quick. Things spread on Twitter so quickly. Look at the banks that have failed, how quickly deposits were pulled out because of social media and the word spreading. So I think that's the key, is everything is speeding up, but at the same time, what that does, and this is amazing for the technicals, is that creates more fear and emotion, more greed and fear, because it spreads faster, and therefore that gives us, as technical, level-headed, kind of disciplined traders, believe it or not, it gives us more advantage. It gives us more opportunities to take advantage of these kind of mispriced situations.
Gareth highlights that trading is ultimately about understanding human emotion rather than specific stocks, companies, or cryptocurrencies. He explains that all charts are equal because they reflect the collective behavior of traders. By studying historical patterns, recognizing key levels, and understanding market psychology, traders can make informed decisions based on probabilities rather than emotions. Soloway emphasizes that losses are an inevitable part of trading regardless of one's expertise. Every trader, including himself, experiences losses at some point, and it is essential to recognize this reality and focus on minimizing and controlling losses while knowing when to exit a position. What do you think about Soloway's market strategy for crypto? And what is your prediction for the price of Bitcoin by the end of 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is the Library of Wealth. We'll see you in the next video.